we turn our attention to the leasing business and the market opportunities arising in this market environment. So our topic is enabling investments through leasing, a look at the European leasing market. So leasing is an important driver for the future investments in Europe. The volume for necessary investment is enormous. So I'm happy to have our panelists here, Richard Knubben and Malte Rüsing. I would like you to introduce yourself. Maybe Richard, would you like to start?
Yes, thank you for having me. I'm Richard Knubben. I'm the Director General of Leaseurope, which is the European Leasing Federation. I'm also Director General of abcfinance, which represents consumer finance, but I'm here today for the leasing side of things.
Yeah, Malte.
Great. Thank you very much, Robert. My name is Malte Rüsing. I'm the Managing Director of abcfinance in Cologne. We are a medium-sized leasing and factoring company servicing corporate customers across Germany as well as in Austria and the Netherlands. So it's really great and it's a pleasure to be here. Thank you.
Yeah, thank you for having you here. So we are just going right into the topic. And Richard, I would like to ask you to give us an overview. What is the status and the development? What are the highlights on the European leasing market?
Yeah, so we've just been looking at our 2023 figures, which will be presented at our annual convention as well. And overall, I mean, the new business volumes are still going up. So we did in 2023 roughly 450 billion financing of assets, new assets. What stands out though is that whilst the equipment segment is strong, the vehicle segment is even stronger. And there's a double reason for that. Part of it is, of course, that prices have simply gone up, but we have signed more contracts as well. Now, within that segment, electric vehicles, of course, play an important role. But equally, other sectors that have gone rather interesting are things like, for example, bicycles, electric bicycles, and of course, leasing of equipment to generate renewable energies and everything behind that. Because, of course, the focus tends to be in all these discussions on solar panels and heat pumps and things like that. But by and large, because of increased efficiency standards and energy standards across Europe, pretty much every asset is being replaced. And it's especially small and medium-sized enterprises that have to replace their old fridges and freezers with newer fridges and more energy efficient freezers and fridges and freezers and so forth. So it has a huge knock-on effect, and it's not just on the, let's say, fancy assets that everybody's talking about, but everything else as well, basically.
So maybe if you would have a little bit closer look into the growth rates, looking into certain countries, maybe you could help us to navigate a little bit. What are the growth rates? If you would put that in a little bit in order and the business volume in the background.
Yeah, I mean, if you look at it in clusters, Germany has done, of course, especially well with growth of almost 20%. If you contrast that with the Benelux, it's around 16%. Central and Eastern Europe, 17% overall growth rate. Italy, 9%. Mediterranean cluster, again, around 18%. So by and large, most countries have done pretty well, I would say. The segment that hasn't done that well is real estate across Europe, but most other sectors have actually seen significant growth. Now, again, you have to bear in mind that part of it is, of course, new contracts signed, but we have to recognize that a lot of assets have simply become more expensive. So that also translates into substantial growth simply because prices have gone up. So as such, what we report also goes up.
Yeah, so Malte, what's your view on that, looking into certain European countries and your experience regarding their development, and how do you see that?
Yeah, it's exactly as Richard just said. In general, we have a high increasing rate in new business volume all over Europe. But as you stated, as we are our headquarters in Cologne, of course, the German market is quite interesting. And if you look, the growth of last year all over in Germany is quite high. And if you look at the historical years or the last years, that is something we did not expect at all. But in general, of course, you have differences across Europe.
Yeah. So looking into, for example, the business investments in Europe was facilitated by leasing industry. What role does the SMEs, for example, have from your perspective in that growth rate?
A very big portion, I think, and exactly what Richard as well said. Say, there's a high demand of replacing assets. There's a higher replacement rate due to more efficient machines, more carbon neutral things, and so especially the green transition is very much provided or supported by the leasing industry, and that is where we as a leasing company come into action, where the SME is more focused on us with having a broader service base, despite or in comparison with bank loan or so.
Mm-hmm. Maybe looking into the asset types. Just a question back, Richard. So what are the shares of the main asset types that you recognized in 23, and maybe a little bit country-wise? Not going through all the countries, but maybe some selected ones where you were, for example, in the Benelux, Germany, and maybe covering UK.
Well, I mean, I can give you the total European average that I have in front of my nose here. So passenger cars is, of course, the largest segment, about 55%. And commercial vehicles is 18%. Machines and industrial equipment, 15%. Real estate, 2%. ICT, 3%. And everything else is defined as others. I mean, we've seen over the last couple of years that the vehicle segment in particular never seems to stop growing in relation to everything else. Now, of course, the pie itself is becoming bigger. So as such, it's not that strange. It doesn't mean that the growth of the vehicle segment is coming at a cost vis-a-vis other types of assets. But it's interesting that it's continued to take on that role. And as I just mentioned, if you look at the growth in things like bicycle leasing, something, if you would have told me 5-6 years ago that this would become such a major trend and so popular, especially in Northwestern Europe, I wouldn't have believed it. But I mean, especially the e-bike segment in the Netherlands, Belgium, Germany, France, it's huge, and the growth potential is there for significant expansion beyond the numbers that we're seeing today.
Yeah, so we see that there is a high impact coming from the mobility side, mobility in respect of vehicles and bicycles, and the growth rates here, and everything in the field of ICT, for example, is under pressure. So what's your view, Malte, regarding these asset types? Where do you see from your business opportunities, and where are some threats at the moment?
Yeah, so as you probably know, that we as ABC Finance, we are very bright spread or wide spread, with, of course, having some kind of focus in mobility as well, because the market is mobility driven, that's for sure. But we are as well very positively shocked on the development in e-bikes. That's pretty interesting, but that could, of course, also be a threat, as you just asked, okay, what's the threat behind? And if you look at the average ticket size of a bicycle, of an e-bike, it's around 3 to 4, maybe 4.5K, and that means at the end that you have to be very efficient in your processing. So you need much more digitalized, much more automated processes, comparing that to bigger tickets where it makes probably no sense to be that automated. And that is maybe not call it a threat, but that is a chance for a modern leasing company to participate even more on the market growth.
Yeah. So let's have a look again regarding the frameworks in the market. So framework conditions, Malte. How do you see that? What are key factors in terms of the framework for a certain business?
Well, if you look at overall framework conditions, you could look at economic and political stability. That's definitely an issue. Almost every company was and is still affected by the multiple crises we had, beginning from COVID over Russia, Ukraine, and up to a recession where we are after the interest shocks, what we saw, and that is definitely an issue. But with regards to the financial industry, especially also leasing and factoring, we see a big issue in the regulatory requirements, what we have, and the differences across Europe. If you look at Europe, we have a very heterogeneous situation. You have a very uneven playing field all over Europe. And that leads to probably some kind of disadvantages, competitive disadvantages, where I would really like to ask the policymakers to have a look at that, to really think about, does that make sense? We have a single market, but if you look at regulatory requirements and which are increasing constantly, just have a look at ESG or whatever, that's really, that is something where we have to pay attention for. And that's something that's important for every single leasing company.
Yeah. So, Richard, you recently issued a paper on access to funding for leasing companies. And you got into various cases. And I just want to highlight how you would see what role and impact have certain incentive structures in certain markets.
Yeah. So the reason why we issued that paper is because we've seen that in a number of member states, a variety of either subsidies or tax cuts or whatever kind of support we're talking about are only available in case of an outright purchase. So if there is, let's call the leasing company an intermediary in this case, if the leasing company acquires the asset and the asset is not immediately registered in the name of the user, which would be the case without the purchase, then the leasing company cannot benefit from whatever support there is available. Now, for a number of assets, those supports are very important. And of course, everybody immediately starts thinking about electric vehicles. But to use a different example, we've seen in various countries that to acquire a new tractor, if the farmer is getting a loan for it, he will get a very substantial subsidy. And on a 300,000 euro tractor, if you get a 40,000 discount, that makes a lot of difference. And in case of a lease, that's not available. So what we've been arguing for within the European legislative framework is that, or that legislation, of course, that applies in these kind of cases, that leasing and rental is specifically mentioned so that it's not excluded. Because our problem is that very often our service is not mentioned in European legislation. And then when you see at national level, the regulator says, oh, well, it's not in the legislation, so I don't have to proactively recognize that and allow this type of service to benefit from this type of subsidy. Therefore, they're excluded. And technically, they're not doing anything wrong. But that goes completely against the Commission's own assessments of the positive impact leasing has on SMEs, on the green transition, and so forth and so forth. And that could really help asset renewal, and it could make us a lot more efficient in those markets where currently we're excluded from benefiting from these kind of supports. So it makes a big difference, and it's been a bit of a struggle to echo that message through Brussels, but they seem to be picking up on it now.
Yeah,
I can totally agree. I can really totally agree. Just as a really precise example, historically we are very strong in the trucker trailer business in the Netherlands. And if you compare, if you have a regular truck, you pay 100k or 120 or 150k or whatsoever. If you now want to drive green transition, and you know that you have to, because otherwise you are not allowed to go to the last mile in the city center or whatsoever. But the bigger electric truck is 400k. And then the big question is, how the hell should the customer pay for it without having the possibility to use a subsidy? And exactly, Richard, what you said. We have at the moment only the possibility, if ever, to use a higher purchase to finance that. And that is something where the legislator really have to pay attention to it, because otherwise it makes no sense for a leasing company to step into it. But I think we have to support the green transition as well.
Yeah, sure. Would you say that it needs to be balanced a little bit more, the opportunities and threats in the green transition, financed by leasing?
Yeah, not only financed by leasing. In general, it has to be more balanced. Yeah, you have a huge amount of regulatory and data-driven requirements, what you have to fulfill, all the ESG reporting whatsoever. Then a special position or situation for leasing companies that we have some kind of link position between the real economy, the industry, and the banking sector, and that is something. If you let's stick to the ESG reporting. We are not a bank, but we are also not an industry company. So it's pretty hard for leasing as well as for a factoring company to fulfill these needs. On the other hand, if you look at the volume that has to be financed, there's the need for leasing and higher financing as well. And that is something where the policymakers should pay attention to, in my opinion.
Yeah, so maybe to have a look into the digital processing. Richard, what do you see? How can digitalization support a leasing business in terms of meeting everything that's coming from the green transition, from ESG, but mainly to scale the business? So what would be the role of digital processes?
Yeah, I mean, there are, of course, a lot of different aspects here, but I mean, fundamentally, at their core, leasing companies are asset specialists, right? So you collect a lot of data, new data, historical data on how an asset performs. That helps you to advise your client on what kind of data, what kind of asset he needs. It also helps you, should you be dealing with an operating lease, to resell it. It helps you to assess what the risk is in case the asset has to be reclaimed. And at the same time, of course, you also have to grant the lease at the beginning. So you have to do a creditworthiness assessment and so forth and so forth. All of that is an incredible amount of data that has to be analyzed and it has to be stored also whilst the asset is in use. That has to be evaluated. All the additional insurance products that come with that have to be evaluated and analyzed. So the more that process is automated, and it is increasingly being automated, and the more you can use artificial intelligence to do modeling on cost reductions, efficiency gains, and overall management of your assets, the better you will perform. That's fairly simple. I mean, where leasing companies perform better than lots of other types of financial service providers is exactly that: data analysis with regards to the assets that they provide the clients with. So the faster they can do that, the better they perform, the better the service that they can give to their customers, and the happier the customers will be. So ultimately, it's that. And I'm not talking here about really fancy new kinds of AI and fully automated decision making. But a lot can still be done in terms of improved modeling.
Yeah. So what's your experience, the digital transformation in your company, and the outlook? What is game changing?
Just before I reply to that, maybe add one sentence or two to what Richard said. I think, of course, you collect more data, what you can use, and you can argue, okay, what the hell make it sense to report all that ESG data or whatsoever. But we as a leasing company can use it on our own to be even better, because you can just have installments based on the usage of the asset. You can even predict the lifetime of an asset, because you know what happens with an asset, and that is something what we can use. But what you asked, what our own experience within ABC Finance is, just a few examples. And of course, there are a few things what we already do or what we did, and well, at least what we have a look at. And yes, we have some experiences with AI in contract creation processing, in having a look at, okay, how can I use probably, for example, chatbots or voice bots or so ever to enhance the user experience. That is something we do. You could also use, and we tried to, but wasn't that successful, to be honest, to use generative AI in the recruitment process. Was not successful, as I said. But as you know, I'm responsible for the risk part within ABC Finance. That is something where we are at the very beginning, but where I see a lot of potential in getting not away from the traditional credit bureaus, but use them plus a lot of other data coming from the internet, from social media or whatsoever, and then use highly sophisticated models for the credit assessment of a customer, like, don't know, random forest models or whatsoever. That is something where digitalization is not only AI, but in general, modern technology could really help.